Okay, so chapter 2, we are learning about a little bit more about that Fair Labor Standards Act, as well as how to compute gross pay. I'm not going to go through the whole PowerPoint, but I thought I'd just kind of bring out some specific things that I thought were possibly special or confusing or a little bit interesting. So I'm just going to kind of hit the highlights since you've already done the adaptive learning quiz to kind of learn about this. But again, the Fair Labor Standards Act, that is a federal law. So it defines everything from, who is held to follow the Fair Labor Standards Act, defining who an employee is, how regular pay and overtime pay is handled, exempt versus non-exempt employees, all kinds of things. So it just kind of tells you there's different people covered. If you're under enterprise coverage, that's going to be if you have all employees, if 2 or more work in interstate commerce, and 500,000 or more annual gross sales or produce goods for interstate commerce. And then nonprofits are going to be considered part of this enterprise coverage regardless of annual sales volume. So Fair Labor Standards Act is going to cover all of those people. It's also talking about individual employee coverage. So employees whose companies may not meet the enterprise coverage, but they do in other ways. So for example, we drive for a fleet that transports goods interstate with annual revenues equal to $225,000. So basically, if we either fall under enterprise by either way, like profitable or nonprofit, or some type of individual employee act, then these federal wage and hour laws are going to cover, okay? So if we're a small family business, we can be exempt from some of those, depending on how, what our profits are, how we are taxed, everything like that. So it can vary. So this Fair Labor Standards Act, we have to know, does our business qualify under this to know whether or not we're following the law? Again, we talked about this already. The Fair Labor Standards Act sets minimum wage. That's going to include all rates of pay. So not just your standard hourly rate, but commissions, bonuses, severance pay, on-call or differential pay. So we can include those types of pay when we're calculating minimum wage, because you may have a salesperson that's working all commissions. So we can count those commissions as their minimum wage or towards that minimum wage. If it's a discretionary bonus, so that's one where the employer just decides to provide a bonus, that is not considered part of their minimum wage. So unless it's a non-discretionary bonus, meaning something that the employee and the employer have discussed and agreed to as part of their wages, it doesn't count towards their regular rate of pay. But we can count other types of compensation. These are excluded as well. So other types of compensation not included in the regular rate of pay would be any gifts that are provided. Now this is different from what the employee has to report on their taxes. It's still earnable or taxable income, which we'll talk about in later chapters. But as far as considering it regular pay, we're not considering it part of the minimum wage regular pay. So we can't pay them $4 an hour and then compensate with vacation time. Okay, which some people might be okay with, but I just work a little bit. So those are gifts and payments for like profit sharing, vacation, holidays, sick day, jury duty, vehicle, tool, or uniform allowances. Those are compensation. The employee still has to count it again as part of their taxable income, but it's not considered regular pay. So we can't, again, pay them lower than $7.25 and give them some of this to compensate. That's all that means. Again, the current minimum wage federal is $7.25 an hour. We kind of talked about it, how different states may have their own laws that will override or supersede these federal laws. Oklahoma is still $7.25 an hour, though. And then there are exceptions, which will come into play in some of the examples we do. If we have an employee that is less than 20 years old, we can pay them $4.25 an hour for the first consecutive 90 days of employment as a training wage, okay? So again, that's a possibility. That doesn't mean companies have to pay them that wage. It's just they're allowed to. We talked a little bit about this too last week. Institutions of higher education, retail or service establishments, and farms may pay full-time students 85% of minimum wage. So students, full-time college students, or high school students can actually earn a minimum wage of $6.17 an hour. Again, they're not required to pay them that amount, except for usually like institutes of higher ed, like here. If it's work study money, it's federally funded, then it is going to be at that $6.17 per hour. But if you've ever worked retail or service as a full-time student, they're not required to pay you. They can pay you a higher rate, which is good, right? That would be bad. And there's more exceptions to that. We're going to talk about tipped employees too, because that's a big one. But there is a complete list in your book that goes over all the exceptions to minimum wages. But these are kind of the most common that you run into. So again, a tipped employee, though, is one who's working in service, and tips make up part of their salary, and they rely on them for part of their income, okay? So if you've ever waited tables, you know that your minimum wage is different. I know I waited tables in high school and in college, and my minimum tipped wage was $2.13 an hour. It has not changed in 5 years. No, I'm just kidding. A good 20 years, right? So, that's just the minimum. But how it works is, and this is why I wanted to talk a little bit about this, and I didn't understand when I was a waitress. I really didn't understand what we were doing, but we had to report how much we made in cash tips every week, because your employer is going to take that amount and report it to the IRS and as a payroll, because we still have to be meeting the minimum wage requirements, okay? So we can't have a tipped employee making $10 a week in tips and paying them $2.13 an hour. They still, tips plus the minimum wage still needs to equal minimum, the $7.25 an hour. So what happens is employees that are getting tipped and making $2.13 an hour, again, they're reporting to their employer how much they earned in cash tips. And if they're, if they work 40 hours a week, as it says here, employee must make $7.25 an hour when combining tips and wages. So all total, if they work a full 40 hours a week, they need to be making at least $290. So part of that is the $2.13 an hour times 40. I think it's like $85.40. So $85.40 is coming from the employee or employer that we're paying them in wages. Well, the difference, if they're not making that in tips, the employer has to make up that difference, okay? So that tip credit of $5.12 an hour is important, because they need to be making at least $5.12 an hour in tips, for however many hours they work, to get up to that $7.25. Now, if you've ever waited tables, a lot of times, if you're working 40 hours a week, you're going to exceed that. Hopefully you're making more than minimum wage. But if you weren't, if something happened and you didn't get very good tips, the employer does have to make up that gap, okay? So again, like I said, $2.13 an hour times 40. Pretty sure that was like $85.40. Double check. $85.20 is close, right? So under 40 hours a week, we're paying them $2.13 times 40. We're paying them $85.20. Okay. So if the total minimum that they need to work to make is $290, they need to earn $214.80 in tips a week, or otherwise the employer is going to have to pay them extra to get to that. Okay, so that's what that is saying. That's why the employee is responsible for reporting cash tips. I know when I waitressed, whoever knew it, whoever was reporting knew that, and they told us how much to report. And so you do have, unfortunately, with tipped employees, a lot of people are not accurately reporting how much they're making in tips because you are taxed off of that amount. So as an employee, if I claimed $400 that week in tips, I'm actually being taxed off $400 of tips plus the $85.20 my employer is paying me. So I'm getting taxed off $485.20. So my paycheck is going to be $85.20 minus those taxes. Very small, but again, you're pocketing a lot of cash, right? So it is a little different. So again, you know, there's some gray area. Obviously, people aren't reporting accurately. We're not going to get into that big. But our employees are supposed to be recording accurate tips that they've received, but we need them at least reporting the minimum if they're making the minimum. You know, as long as they're making at least $214.80 in tips a week, then we're above that minimum and we're good there. Okay, so that's kind of an important category. It's different, right, with tipped employees. So, but they still have to be making minimum wage. It's just a combination of tips and the $2.13 an hour. So here they're just kind of showing an example. Like Raquel works 47 hours at Chris Church Bar as a tipped employee. She averages $750 in tips a week. If her employer takes the maximum tip credit of $5.12 an hour, this is how her gross pay will be calculated. And in this case, with $750 in tips, she's well exceeding the minimum wage. So they can take that full tips credit. So if she's earning 40 hours at $2.13, again, that would be the $85.20. And then she actually still earns overtime. So she works 7 hours of overtime. So she's actually going to get, how they calculate overtime is a little bit tricky. That 1088 is actually the minimum wage overtime rate. So that's $7.25 times 1.5. I believe that's how they got that. Yeah. So that's 1088. So that's the typical overtime rate under minimum wage. And then they're subtracting out the tip credit. Okay. So she's getting $5.76 an hour for overtime. So that's how overtime is calculated with a tipped employee. So you have to calculate minimum wage overtime rate, which is $10.88, and subtract out the $5.12 tip credit. So we get a $5.76 overtime rate for tipped employees. So you would think you would take $2.13 times 1.5, but that's not how they do it. Since it's an overtime, they're actually calculating, again, the standard overtime rate and subtracting the tip credit from that. So you're actually getting, for overtime, you're getting a little bit more than 1.5 times $2.13. So it's in the employee's benefit. So that was something I wanted to point out just because it's a little irregular, right? And we'll do an example like that. We'll talk about that later. It doesn't matter what days of the week, how we run our payroll. If a week is considered Sunday through Saturday, Monday through Sunday, Wednesday through Tuesday, it just has to be 7 consecutive 24-hour periods. So that way we have some kind of standard to track our employees' time and their overtime. So those are set by the company, what days they actually track. Again, this is different for different states. Some states require daily overtime over 8 hours. So you could actually work, not work over 40 hours, but if you work more than 8 hours on certain days, you get to claim overtime. So again, that depends on state laws. I don't believe Oklahoma follows that. I think we just follow federal overtime, which normally overtime is classified as anything over 40 hours in a work week. Okay, so again, we just have to follow state law. The Fair Labor Standards Act classifies overtime as anything worked over 40 hours a week, and overtime pay is 1.5 times regular pay, okay, for any hours worked over 40. We'll look at that. It's where people get a lot of confusion with the Fair Labor Standards Act is they think there's more protection for employees and workers than there really is. Honestly, the guidelines are pretty slim. Yeah, it sets overtime and what's a work, week and things like that, but employees, an employer can require you to work overtime. There's nothing that says that they can't work you overtime. So they can require you to work overtime as part of your normal job duty. Now, if you're what we call a non-exempt employee, which we'll get into that in a little bit, they are going to have to pay you for that overtime, but they can still require you to work it. Exceptions, again, we're not going to go into this too much, but hospital employees, they're always an exception because they work 12-hour shifts a lot. They work weird shifts, and their hours are different. So they actually, hospital employees, overtime for 80+ hours in 14 days, or over 8 hours in a day, whichever is greatest. So theirs run a little different. You would only have to worry about that if you're payroll in a hospital situation, how they would calculate that. And we're not going to get into it, but if an employee earns commissions, there are exceptions to overtime and remedial education. Again, those don't really, they're kind of little special circumstances. I know this applies here a lot. We have what we call comp time or compensatory time. So what an employer can do, they can require you to work overtime instead of paying you. Say you're an exempt employee, so they can't legally pay you overtime. They can offer you comp time instead, or even if you are. So a lot of times what they'll do is they'll say, okay, we need you to work 45 hours this week, but we'll give you comp time, so you can take 5 hours off next week and still get paid your full salary. So that's a pretty common thing. So it's just called comp time. So you're getting compensated with time off instead of with extra pay. Okay. It says if like employees in public safety, for example, or emergency response, they actually get 1.5 times comp time. So they are earning comp time at a rate of overtime. They're earning comp time 1.5 times. So they can accumulate up to 320 hours of comp time at 1.5 times the rate, or 480 hours of comp time. And then they also say, state or political subdivisions and interstate governmental agencies may grant comp time. So again, a lot of times this is for exempt employees that we don't pay overtime rates to. So we compensate them for extra hours. Just depends on the employer and how it's structured. So exempt versus non-exempt. That's a very important concept when we're dealing with gross salaries and figuring out gross pay. Exempt means that if they're an exempt employee, they are exempt from some of the Federal Labor Standards Act provisions, namely overtime. So if we have exempt employees, they are not paid overtime, generally speaking, okay? And they have changed this, as you can see by the note, as of December 1st of 2016. So it's been almost 2 years now. They did change this, and they said you couldn't be an exempt employee, or they couldn't classify an employee as exempt unless they made at least $913 an hour, okay, per week. That would be a lot. Man, I want to be exempt. Yeah. So they have to make at least $913 per week, salaried, to be allowed to be considered exempt. Man, that'd be a great job, wouldn't it? We're all getting way underpaid. I'm like, I'm exempt. No. So we're talking about white collar workers here, a lot of like CEOs, upper administration, and And even me, like when we consider professionals, if they require a professional degree, a lot of times they will make it an exempt salaried position. And so it just depends on, you know, we have a chart we're going to look at. But a lot of professionals, executives, administrators, business owners, people that are highly compensated are going to be considered exempt employees. So they may require that you work more than 40 hours a week, and you will not get paid overtime for any hours over 40. So, but you have to make at least $9.13 a week, which I think was a good change, because if you were making lower than that and they were expecting you to work more hours, you could, you know, that's not a good situation. So I like that they changed that. These are the different categories to achieve exempt status. We're not going to read through them, but you can kind of see it depends on what area you work in, what defines an exempt employee. Okay, so for example, under professional, work requires advanced knowledge and knowledge acquired by a prolonged course of instruction. That's kind of where I fall under professional as an educator, because we're required to hold an advanced degree. So I'm considered an exempt employee. As you can see, a lot of executive, if you're supervising and managing, you probably fall under that. Administrative, doing office work and using discretion and independent judgment. So again, some of these are just the requirements to be considered exempt. So for an administrative person to be exempt, they need to be performing office work and using, you know, discretion as far as making decisions. And they must earn at least $913 a week, okay? So if we pay them less than that, they cannot be exempt, which helps them out probably, because then they can earn overtime, okay? So that's just a little bit, you can read through all of the requirements. We're not going to deal with that too much, but it's just important to understand exempt versus non-exempt. Most of the time before 2016, when they changed that rule, most salaried employees, if you were actually given like a yearly salary, that usually kind of indicated that you were an exempt employee, because you were getting paid. They said, oh, we're going to pay you $35,000 a year, or we're going to pay you $50,000 a year, you know. But you can actually have exempt or non-exempt salaried employees. So it kind of gets a little muddied. But again, when we look at that, when we're determining exempt versus non-exempt, we go to that chart. If they fall on that chart, then they're exempt, and they earn the $913 per week, okay? So those are the two things. Blue collar workers are always entitled to overtime pay. So we're talking police, EMT, firefighters, paramedics, LPNs. Those are always going to fall under non-exempt, okay? Again, the biggest thing, just because we're a salaried employee does not mean we're exempt or non-exempt. It doesn't mean anything. It's just how our pay is categorized. So if we have a salary employee that works more than 40 hours, if they're non-exempt, they're still earning overtime. We just have to do a little bit more to calculate it, because we have to calculate their hourly wage first. And this is the thing that always interests most people. What does FLSA not cover? Because I always get students, or I've heard employees over the years saying, well, they don't give me vacation time, and that's required by the federal law. It's not, surprisingly. And they're not required. Employers are not required to pay extra for weekend or holiday work. They're not required to pay for holidays, vacation, or severance pay. They're not required to limit the number of hours of work for persons that are 16 years of age or older. They're not required to give you holidays off, or vacation, or sick leave. Now, do a lot of employers provide those benefits? Yes, they do. But those are benefits. Again, states could have their own labor laws that supersede this, but in general, the federal law does not cover giving you vacation, sick leave, any of those. Those are considered benefits of the employee themselves, the employer themselves. So obviously that's an important thing to consider when you're looking at a job, are those benefits, because that equates to more money, but it's not required. I'm not going to go into too much detail on this, But we also need to worry sometimes about, well, when am I actually getting paid to work? Okay. So we consider principal activities being paid time. Okay. So usually prepping or putting on protective gear, getting ready for the day can be considered a principal activity. Travel can be if it's part of your principal work day. So if you have to travel as part of your job, not your commute time. I wish I'd be like, oh, it took me 35 minutes to get to work today. That is not part of your pay. But if you're having to spend travel time during your work day to do your job duties, then that can be considered, compensated time. Same with idle and wait time. Like truck drivers, for example, if they're delivering goods and they're sitting there waiting for their next load, that can be considered hours on the clock. So it just depends on what the job duties are. One thing we are required, rest periods. There are some laws that said, we're not going into all the workers' laws, but if we work so many hours in a day, we're required to give like 20-minute breaks, and those are considered on the clock breaks. Okay, so the employee does not have to clock out during the 20-minute break. But we do not compensate lunchtime unless the employee is required to work during lunchtime. So that is time on their own. Working from home, this one's becoming more and more common and kind of interesting. If we're an exempt employee, you're getting paid for your work, not the hours necessarily that you're putting in. So you work from home, you're not getting extra compensation. However, if you're non-exempt, meaning you're eligible for overtime, they have to pay you from working from home, even if it's outside of normal office hours, even if they didn't assign you the work outside of office hours. So that one gets a little tricky. Be like, okay, come back. I worked from home, so you need to pay me these 2 hours. So that one's a little interesting. Again, you still have to be able to prove those hours. So you can't just say, oh, I worked all night. A non-exempt employee can take work home and be compensated for it. So again, an employer might set their own specifications on how that is handled, but if they work from home, if they're non-exempt, they have to be compensated. Again, sleep time, if they're required to be on duty less than 24 hours, it depends on, again, the nature of the job. A lot of these are kind of special circumstances, but if it's part of their shift, then it can be covered. Again, with training sessions as well, waiting for appointments on site, those are all kind of special circumstances. So I wanted to cover just those few little caveats because I find them a little different, especially like the tipped employees and exempt versus non-exempt, before we did examples together.